Good afternoon, investors. You're now on KleverStock with me, Wanizul, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. So we kick it off with Bursa Malaysia updates. Investor sentiment in Malaysia and across Asia saw a significant reprieve this Thursday morning as markets reacted to cooling tensions in the Middle East. The benchmark FBM KLCI rebounded 8.03 points to close at 1,706.25, recovering from a dip below the 1,700 psychological level earlier in the week. Now, the recovery was largely attributed to a stabilization in global energy outlooks after US President Donald Trump announced plans for naval escorts in the Straits of Hormuz to safeguard the free flow of energy. The regional relief rally was ignited by a policy shift from Washington. Amid fears of a total blockade in the Strait of Hormuz, a choke point handling at least 20% of global oil, President Trump pledged U.S. naval protection for commercial tankers. Now, this move, combined with the offer of, at a very reasonable price, political risk insurance for shipping firms, helped cap Brent crude's rally, which had briefly threatened to breach $100 per barrel earlier in the week. Now, Apex Research noted that any signs of diplomatic de-escalation or policy restraint could help stabilize sentiment and support a gradual recovery in risk assets. Now, while Malaysia saw steady gains, the most dramatic movement occurred in Seoul. Now, the Korean exchange, the KRX, which had suffered an unprecedented 18% rout over the preceding 48 hours, skyrocketed 12% to 5,684 in early trade. Now, this bounce back was driven by a massive return of liquidity to AI-related technology stocks, which had been the primary victims of profit-taking during the initial panic. Now, in Tokyo, the Nikkei 225 also showed resilience, rising 4.12% to 56,478, as the risk premium associated with a broader regional war began to recede. Now, on the local front, heavyweights led the upward move. Maybank rose 4 cents to 11 ringgit 70 cents, while Press Metal, a beneficiary of global industrial stability, added by 17 cents to 7 ringgit 57 cents. Now, despite the positive index performance, the active list remained mixed, with energy-related Bumi Armada slipping 1 cent to 34.5 cents, reflecting a slight easing of the oil war premium. Apex Research maintained a constructive bias for the FBM KLCI, asserting that the broader upward structure remains intact as long as the index holds above its established uptrend support. Moving on to our local currency and foreign exchange, the ringgit opened marginally higher against the US dollar this morning as market participants shifted their focus toward the impending overnight policy rate or OPR announcement by Bank Negara Malaysia, BNM. Despite the persistent geopolitical instability in the Middle East, the local note rose to 3.9340 or 3.9450 at 8 a.m. this morning, showing resilience against Wednesday's close of 3.9395 or 3.9465. Bank Muhammad Malaysia Berhad Chief Economist Dr. Muhammad Abzanizam Abdul Rashid noted that the central bank is widely expected to maintain the OPR at 2.75%. However, the focus will primarily remain on the accompanying monetary policy statement for the bank's latest assessment of geopolitical risks and their impact on domestic growth. Markets will be watching the OPR decision later today. The accompanying statement will set the direction of monetary policy going forward, and that was stated by Afzanizam. Now, addressing the recent spike in global crude prices, Muhammad Afzanizam highlighted that Malaysia's structural reforms have significantly reduced the national budget's dependency on petroleum. Oil is projected to contribute only 12.5% to total revenue in 2026, a sharp decline from over 40% in 2009. Now, Afzanizam added that Malaysia is therefore somewhat insulated from an oil price shock. He also explained that the export of higher grade crude at better premiums helps offset the costs of imported oil for domestic use, contributing to the ringgit's stability. At the opening bell this morning, the ringgit exhibited a mixed performance against global majors and a stronger trend against regional peers. Our ringgit was flat against the Japanese yen at 2.5062. It also strengthened against the British pound to 5.2594. However, it did ease versus the euro to 4.5772. Against ASEAN counterparts, the ringgit appreciated against the Singapore dollar to 3.0857. It also went up against the Thai baht 12.4494 and the Indonesian rupiah to 232.8. Now, analysts expect the currency to trade within a tight range for the remainder of today as traders adopt a wait-and-see approach ahead of the 3 p.m. announcement by Bank Negara Malaysia. Now we're going to be moving on to some local economic news. The escalating conflict in Iran, a war US President Donald Trump has warned could persist for up to 4 to 5 weeks or even longer, is creating a sharp divergence across corporate Malaysia. While some firms face significant operational risks due to their Middle Eastern footprints, others are emerging as strategic beneficiaries of the geopolitical instability. According to a recent note by Maybank Investment Bank Research, several listed Malaysian companies possess direct exposure to the conflict zone. For example, DXN Holdings Berhad, which operates a manufacturing plant in Dubai, draws approximately 10% of its revenue from the region. Similarly, Vasco Berhad maintains a fabrication yard in Jebel Ali, Dubai, and a pipe coating facility in Qatar. Malakoff Corporation Berhad also faces earnings pressure as its power and water concessions in Saudi Arabia, Oman, and Bahrain typically contribute about 25 to 30% of normalized earnings. Now, in the aviation sector, however, Thai Air Asia X has already cancelled its flights to and from Riyadh, Saudi Arabia, as a direct result of the global tensions. On the flip side, the conflict is creating windfall opportunities for specific indirect beneficiaries. Maybank Investment Bank Berhad, they suggested that Westports Holdings Berhad could gain if access to Dubai's port of Jebel Ali is compromised, potentially rerouting transshipment volumes to Port Klang. Furthermore, Northeast Group Berhad is positioned for an upside as the biggest supplier of photonic laser components to military original equipment manufacturing for defense systems against military drones. Now, within the energy sector, Dialog Group Berhad is identified as a potential winner among upstream assets directly benefiting from higher realized energy prices. Now, the sustained elevation in oil prices also provides a necessary buffer for Petronas, which reported a 21% year-on-year decline in core earnings for 2025, while higher prices improve cash flow for local oil and gas services and equipment companies. They also coincide with a reduction in government payouts. Now, for 2026, the Petronas dividend is expected to fall to 20 billion ringgit from the 32 billion ringgit delivered in 2025. Maybank IB noted that the price of oil has effectively become the fear barometer for investors monitoring potential disruptions to the Strait of Hormuz, which handles over 20% of global oil transit. Now, while OPEC Plus has announced a production hike of 206,000 barrels per day to calm down markets, analysts warn that the price suppressive effect of the latest hike is only likely to be felt as and when the Gulf is reasonably safe to navigate again. For now, corporate Malaysia remains on high alert, balancing the benefits of improved cash flows in the energy sector against the margin pressure faced by energy-intensive downstream industries. Continuing with local news updates, Malaysia's neutral and non-aligned diplomatic stance has been credited for a historic surge in trade, which reached a record milestone of 3.06 trillion ringgit for the year 2025. Now, Investment, Trade and Industry Deputy Minister Sim Zin, he told the Dewan Negara yesterday that the country's consistent friends to everyone approach has successfully shielded its economy from global geopolitical volatility and also retaliatory trade measures. Addressing a question on how Malaysia balances pressure from major global powers, Sim revealed that trade with China, Malaysia's top trading partner for 17 consecutive years, grew 11.8% to 541.45 billion ringgit. Now, simultaneously, trade with the United States rose by 12.3% to 365.07 billion ringgit, underscoring the success of maintaining robust ties with both superpowers. Now, Sim also noted that this achievement was recorded despite the global economy facing trade policy uncertainty, geopolitical tensions, and challenges in international supply chains. He also added that strong increases in both exports and imports supported this growth. Now, to sustain this momentum throughout 2026, the Ministry of Investment, Trade and Industry, MITI, is pivoting toward high-value sectors and also untapped markets. Sim highlighted a significant surge in exports to emerging economies in 2025, including Kyrgyzstan, Yemen, Tanzania, Kazakhstan, Uzbekistan, Algeria, and Kenya. Now, these diversification efforts are part of a broader strategy to expand Malaysia's reach into West Africa, as well as South America. Now, the Deputy Minister also noted the importance of leveraging free trade agreements, stating that these markets accounted for 66.4% of the country's total exports in 2025. With trade exceeding 2 trillion ringgit. Furthermore, Sim explained that export promotion programs will be intensified with a focus on high-value sectors like electrical and electronics, aerospace, and medical devices. Now, the government is also accelerating its digital export strategy by encouraging participation on cross-border e-commerce platforms such as Alibaba, Amazon, and eBay through the e-trade program. At the same time, the Madani digital trade platform is being strengthened to broaden global reach. Now, Sim noted that as of December 2025, more than 4,500 exporters have registered, reinforcing the government's commitment to ensuring Malaysian exports remain competitive and visible throughout 2026. We'll now take a short break, but don't go away. We will return shortly with corporate news developments right after this. And welcome back to the Midday Roundup. Let's continue with how markets are reacting to geopolitical tensions. Now, Goldman Sachs CEO David Solomon has expressed notable surprise at the benign response from global financial markets following the escalation of conflict in the Middle East. Now, speaking at a business summit in Sydney yesterday, Solomon cautioned that it may take a couple of weeks for investors to fully process the economic and inflationary consequences of the war. He noted that markets often react in a muted way to geopolitical strife unless a direct threat to economic growth is identified. Solomon said that I look at the market reaction and I'm actually surprised that the market reaction has been more benign given the magnitude of this as you might think. While oil prices have spiked and the US dollar has strengthened as a safe haven asset, Wall Street's reaction remained relatively restrained. Solomon suggested that there is a cumulative effect to such events that has not yet been fully realized. Now, Solomon noted that there's a cumulative effect of everything that's happening and a much harsher reaction. Up to this point, we haven't seen that cumulative effect. Now, he also added that it's very hard to speculate because there is so much that is unknown at this point, while also emphasizing that he cannot speculate as to how it will play out but expects the implications to be digested in both the short and medium term. Now, despite the geopolitical tension, Solomon maintained a compelling outlook for the United States, pointing to strong macroeconomic tailwinds, including a significant relaxation of regulatory practices and an easing monetary cycle. He suggested that the US economy might actually run a little bit hot this year, potentially leading to stickier inflation than consensus expectations. However, he did warn that a long credit cycle could eventually weaken lending standards as firms compete to deploy capital. Turning to technology, Solomon discussed the role of AI in transforming the labor market. While acknowledging short-term disruptions for white-collar jobs, he dismissed fears of a long-term labor gap. Now, this discussion follows a major deal Goldman Sachs signed in February with AI firm Anthropic to develop AI-powered agents to automate processes, including client onboarding. Now, Solomon noted that while the immediate effects on the bank's employees would be complicated, the firm's focus remains on leveraging these tools for efficiency and process automation. Up next, we have some business updates. Malaysia's palm oil production is on track for its most significant monthly contraction in over a year, a decline primarily driven by severe flooding across its major growing regions. Now, according to a median of 12 estimates from a poll of plantation executives and analysts, output tumbled by 16% in February to 1.33 million tons. Now, this represents the sharpest drop since January 2025 and marks the fourth consecutive month of falling production for the world's second largest producer. Now, the primary catalyst for the slump was heavy rainfall and flooding that hammered plantations in Sabah last month. As a region that accounts for about a fifth of the country's output, the operational disruptions there have had a disproportionate impact on national figures. Now, beyond the extreme weather, the nation's production was already expected to soften due to seasonal lows and shorter working days resulting from holidays. Now, the production squeeze has also led to noticeable tightening of stocks, with inventory sliding 6% from January to 2.65 million tons. Now, this second straight month of drop has brought stockpiles to their lowest level in about 4 months. However, the decline in stocks was somewhat mitigated by a significant cooling in international demand, with Malaysian exports forecast to have dived by 20% month on month to 1.19 million tons. That is in February. Now, the Malaysian Palm Oil Board is scheduled to publish its official monthly figures on March 10th. While the shrinking stockpiles could help underpin higher palm oil prices, which have been pressured by a strong ringgit, traders remain cautious about the broader demand outlook. Anil Kumar Bagani, head of research at Sunwin Group, he noted that the ongoing conflict in the Middle East raises concerns about trade flows for vegetable oils, adding a layer of uncertainty to global shipping and demand. And finally, we're going to be wrapping it up with some major corporate developments and deals across Malaysia. So here are the headlines that you should be keeping an eye out on. At number 1, Jati Tinggi Group Berhad's unit, Jati Tinggi Holdings Sdn Berhad, they've secured a 79.9 million ringgit contract from TNB to help provide a bulk power supply to a new data center in Pasir Gudang, Johor. Well done to Jati. Number 2, Velesto Energy Berhad, via their subsidiary Velesto Workover Sdn Berhad, has secured 2 contracts from Sabah Shell Petroleum Company to provide maintenance services at its deep water operations offshore Sabah. Next headline, Xinhua Holdings Berhad has secured 3.4 million ringgit transportation service order from Malaysia Marine and Heavy Engineering Sdn Berhad. Our headline at number 4, Proton Holdings Berhad sold 13,566 units in February, marking a 31% decline from January's record high sales. At number 5, the headline reads, NextG Berhad saw Raya Aviation Holdings, parent of cargo carrier Raya Airways, become its largest shareholder after taking control of 2 private companies tied to NextG's current and former executives. The next headline at number 6, Midday Berhad is acquiring a piece of land measuring approximately 16 acres in Bukit Padang, Kota Kinabalu, Sabah, from 5 individuals for approximately 15.9 million ringgit. Last but not least, Vasco Berhad saw Urs Hatta Jamaah Sdn Berhad, a special purpose vehicle under the Ministry of Finance, cease to be its substantial shareholder. And that, ladies and gentlemen, is a wrap for Midday Roundup with me, Wanizul, right here on KleverStock. Thank you so much for choosing us, investors. Hope you have a wonderful Thursday ahead. Stay tuned for our upcoming live stream programs, and we'll see you shortly. Bye.